Sure. Yeah, you're absolutely right. The big story in markets right now is that of rising US Treasury yields. But it's important to put that into perspective as well, right? We're talking about yields rising from levels so low that a year ago it would have been inconceivable that US Treasury yields can actually go so low. But alas, equity markets don't like yields rising very quickly, and hence we're seeing these jitters across the board. Having said that, you mentioned that the Fed has reiterated its stance of accommodation. That's critical for equity markets. Add on top of that two other things. We've got the fiscal stimulus, which is expected. Add on top of that, vaccine-related optimism that hopefully will emerge from the pandemic at some point this year. Conditions, in theory, are pretty strong for equity markets to flourish this year. Having said that, performance could come from different parts of the world, the equity world, looking at different geographies, different sectors, different factor exposures. So the way to play it in an equity portfolio we see at WisdomTree is in 2021 to have a diverse approach to building an equity portfolio might be the way to go.
Mobeen, it did jump out to me recently that the trade just got a little bit harder than buying the major indices, that not everything's bouncing at this point, and the violent rotation can just keep some of the major indices trapped. That said, we have seen the Dow chase record after record in recent sessions. There's been a very strong trade around Germany and also Italy. If you are index tracking and just want to buy one particular trade, is it still simple to play those indices because of the rotation that's taking place?
I think that question goes to the heart of this tension that investors are facing right now, because at once they are not only weighing whether they want pure market beta exposure, but they're also weighing at the same time these factors of growth versus value. So there's this tension among investors because on the one hand, you have this value component which is poised to recover as we see the cyclical upswing unfold in the year to come. But at the same time, investors are also looking at thematic exposures because they continue to seek out opportunities that have a long shelf life. And with more options available to investors now than ever before to seek targeted exposures to such themes, just themes like artificial intelligence, for example, themes like the energy transition, themes like digitization of the world, new interesting opportunities to gain growth, alternatives to pure market cap approaches. We think all of this is interesting. So how do investors balance that? We think there's an opportunity to have a bit of both, because in 2021, we might see that growth and value can actually coexist.